Hey everybody, it is Chuck Barone, Monday, October 14th, 2024. Hope everybody had a great weekend, had some fun, and got relaxed because, man, we got another week of crazy coming. I think actually from now till the finish of this month, is going to just get crazier and crazier, guys. Get ready. Um, you guys saw the market today, brand new records again. Stock market just won't stop rocking and rolling, kicking ass. If you're holding stocks, I think most of the people watching this show have some stocks somewhere in their 401s or their portfolios or whatever. Man, it's a great time to be a stockholder, man. Everything at friggin' records. But if you look at the foundation of it all, well, we're going to find out some interesting stuff this week. Anyway, before I get rolling, let me take a half a second. As always, welcome everybody to the show. Welcome all my friends to the chat. As always, my good buddies, Para, Smoke, David Molly. We got Dean on today. We got Oscar. Oh, you in Florida, Oscar? We got, the regular crew on the chat. This is my friend Attila, though. I hope he's good. But anyway, welcome everybody to the show. And as always, guys, much appreciation for this. You guys' support for the show. You guys, the few, are the ones who keep me coming back to do it every day. All right, let's talk about markets today. Let's talk about stuff. First of all, let me explain this friggin' Dodgers hat, okay? You ever make a silly bet with a friend, and when you lose the bet, you have to do something silly? Here we are. My buddy's a big Dodger fan. As you guys know, I'm a huge Yankee fan. And we have our conversations about baseball frequently. And I lost a bet, friggin' Padres. And as a result, I get to do my show and spend the rest of today and tonight wearing a friggin' Dodgers hat. I considered maybe wearing a Yankee jersey, but I thought that would make it even worse. So anyway, if you're wondering why in the hell I'm wearing a hat, number one, and why in the hell I'm wearing a friggin' Dodger hat, now you know. All right, let's talk about markets today. So the stock market blasts off, boom, records. Reading these numbers, the Dow up 201 points, 43,065 on the Dow. That is absolutely an astonishing number, guys. The NASDAQ up 159, getting nearer and nearer to record territory for the NAS, 18,502. The S&P, another record for the S&P, up 44 points, 5,859. The S&P on its way up to 6,000. Man, it's funny, guys, because I know a lot of people we listen to on YouTube, a lot of people, fans and people listening to this show, right? Feeling like we get a lot of bad information and things are not as rosy, even close to as rosy as they get portrayed to us sometimes. But when you see this stock market number, now I don't know, you think they really manipulated things that strongly? A lot of people believe that the government's buying it up or the Fed's buying everything up. Guys, it's really hard for them to do that without leaving any kind of footprint. M2 is actually dropping. The Fed is pulling money out of circulation, not spending more right now. And the federal government, I don't know anywhere in the Constitution where it says it's okay for the federal government or any part of it to buy securities. So I would rule that out and say this is actually a friggin' organic fucking stock market rally. And the reason it's happening, guys, I'm telling you, simple. It's earnings. These companies are earning, man. And we've talked about this since I started the show. The stock market is driven by it's affected by rumors, it's affected by interest rates, it's affected by wars, it's affected by all kind of stuff, okay? But those effects are usually short-term. The long-term, the main direction of the market can always be told by one thing. Are companies earning? And right now, the answer to that is an obvious yes. The bond market, another weird day for bonds, guys. Just the weirdest market ever. The 10-year actually selling off, so the yield rising up 2 basis points, now at 4.10. So the 10-year is really cranking up. It was around, I want to say around 360 And then the Fed cut rates. And here we are now at 410. The 2-year falls 4 basis points. So there's actually some people buying the 2-year. Now at 3.95%, down 4 basis points today. So the bond market's been kind of weird that selling longer term, 10 or longer, buying shorter term, 2 or less. And that seems to be where the market's been going. I'm not exactly sure how they're reading that. They think maybe the bond market is going to diverge from the Fed, which it is starting to do right now, as the Fed's cutting overnight rates and long-term rates are spiking. Is it a bet that the economy isn't so great and maybe that the Fed might have to reverse course? Is it especially with inflation kind of not exactly beaten down to where they want it yet, is it? And we'll get this PCE number on the 31st. And hopefully that'll be the one. I'm sure the Fed is going to get the numbers they want. But you got to say, inflation has been particularly sticky, especially this weird anomaly where you have core inflation dramatically higher than headline inflation. It's very strange, man. So the bond market reacting the way you would expect. The dollar today, boom, big rally on the dollar, up 28 basis points. Now at 103.20. So the dollar is almost back to the level it was at before this whole rate cutting frenzy started. It's crazy. I think it was riding in the 103s for a long time. And here we are again, even with the rate cuts. Very, very strange. Obviously, with the dollar really tightening up, strengthening today, precious metals, gold and silver had a tough day. Gold down $8.20. Still a good, strong number, though. $2,649.70 for an ounce of gold. Solid number, guys. Silver falls 34 cents. $31.16 for an ounce of silver. So silver consolidating nicely above $30, guys. This is good. All this stuff with silver, even if it goes down a little bit on some days like today, as long as it holds that $30 support number, it's only going to continue to get stronger and stronger. And what happens is people's cost basis as people take profit and sell. The new buyer's cost basis is $31.16. Let's not talk commissions or fees. $31.16. So he's going to be less likely to sell at a price under $30. So that's how it consolidates as new buyers come in and their cost basis is higher. It only strengthens the support at $30. And that's what you're seeing happening in silver right now. Oil today, Saudis, thank you, Saudis. Oil tanks down $3.70, $71.86 for a barrel of West Texas Intermediate. The oil market, as I've been telling you guys, it's right where we expect it to be. The bias on oil without the Israel-Iranian stuff is down. Now you got the Saudis. Oh, guys, they're mad because all their friends in OPEC are cheating, overproducing, selling more than their quotas allow. So the Saudis finally getting pissed, as they do from time to time, because this is not uncommon. But now it looks like the Saudis are threatening to open the spigots. And if they do and put millions and millions of more barrels of oil on these markets right now, you're going to see oil prices really come down, which would be a nice holiday gift for everybody because we all got Christmas shopping to do. And those of us who are not Amazon shoppers are going to be driving around. So it'd be nice to have some relief at the gas pump. Oil prices still down. And I don't know, you guys seeing big relief at the gas station? Gas prices are down, but I'm still paying more than $4 a gallon for premium gas. So they're not down that freaking much. So hopefully this next oil leg down will bring gas prices down a little bit better with it. Bitcoin today, wow, guys, Bitcoin over the last couple of days really showing some significant strength, up $3,253. Another great day for Bitcoin. Now $65,960. 2 days in a row because it rose over 3,000 on Friday as well. Breaking back up through support, showing that support number at 60 strong. Actually went under for a little bit and then flew right back up with a 3,000 plus day. Another 3,000 plus day today, basically at 66,000. Looks like Bitcoin, guys, getting ready for a run at the 70. Now, there's going to be some resistance there. It's going to be fascinating to watch to see, can Bitcoin now break through the $70,000 number and stay there, hold its support. It was through 70 briefly, didn't hold it very long, but consolidating nicely now at 60,000, above 60,000, I should say, as it gets ready for its next run at 70. Bitcoin, guys, if you're a Bitcoin holder, all of this to me looks super bullish. So in my mind, I think Bitcoin got some more room to run to the upside. Now we'll see what happens as it approaches 70,000. But for right now, I'm guessing the next move for Bitcoin are going to be approaching that 70,000 number. All right, so let's talk about data this week. As I do every Monday, we're going to point out what we can expect. This week's kind of a weird week, not much happening. Today, the bond market was closed today, so there was nothing. They're not going to release any news. Tomorrow, we'll get Empire Manufacturing, which is just manufacturing in New York State, which is not a big deal. But tomorrow, we're also going to start to get earnings. Citibank, Bank of America, Charles Schwab, banks and brokerages starting to put earnings out this week. If they're earning money, guys, if their earnings are to the plus, like we got on Friday with JP Morgan and a few others, it's only telling us the economy is good. It's only telling if banks are earning, typically that's a very, very strong signal the economy is doing well. So we're looking forward with anticipation to seeing some of these earnings. On Wednesday, we're going to get import prices, which are expected to be down. Part of the reason you saw the PPI number come in so mild. And we'll also get the mortgage bankers index on Wednesday, which will show, more refis being done as rates come down in real estate. Thursday will be the big data day. We'll get jobless claims, which will be the focus this week, I'm guessing. We'll get business inventories. That's another important one. Capacity utilization, industrial production. We're going to get a lot of manufacturing data on Thursday. We're also going to get retail sales, which is a big one. You want to see that retail sales number strong heading into ho. And of course, that's the main part of our economy. And also we'll get the Philly Fed, which is one of my favorites because that shows just a whole bunch of data about where consumers are at, where money is at, where savings are at, where spending's at, and attitudes as well. And then on Friday, to finish things up, we'll get some real estate data, housing starts, building permits. Are they building any new houses? Both of those are expected to be down, by the way. All right, so let's talk just a little bit of junk to talk about today. Number one on the list, will the Saudis tank oil prices? I kind of touched on that as I talked about the oil price. Saudis are all mad because their partners in OPEC are all cheating on their quotas, producing and selling more oil than they're supposed to on their quota. Now, the Saudis are the biggest oil producers in OPEC, as everybody knows. And they're getting a little huffy because they're trying to stick to the quotas. But it looks like the time has come now where the Saudis are just they're mad. And they're going to let the rest of the OPEC nations know they're the boss, because it looks like they're getting set to really opening the spigots and dumping a ton of crude on the world. So we'll see, though, because, the Saudis are not dummies. And they know that when they do that, it's going to tank the price of oil. And they're going to lose money because they're going to be selling more of their oil for less money. But they do this to keep the rest of the knuckleheads in line. OPEC got to be one of the most dysfunctional, angry, crazy friggin' groups in the world. And it'll be interesting to see how all of that plays out. But as you can see by today's oil prices, just the threat of the Saudis really going wild on the market dropped oil prices down almost $4 a barrel. So they're more than 5% down today. Is this job market solid? What do you guys think? You see in these numbers, it just, now they're telling us that, well, businesses aren't really hiring anybody, but they're not laying anybody off either. And it's kind of just and you're reading, I've been reading from people looking for jobs. It's harder to get them, harder to even get to the interview stage. So it's really kind of a question is, can this be, how much longer can this hot jobs market be sustained? Now, what I'm going to look for there is very simple. I'm going to be looking for consumer spending and retail sales. If retail sales are strong and consumers are still spending money, I don't think we're going to see a big spike in layoffs. Unless, of course, something comes along and crashes their margins and they need to, there's more price increases coming or they need to cut people or however they got to do it. But there's just no real evidence of super strength in this job market or super weakness. It's kind of just, and now the reports we get are so conflicting with big jobs reports, but then big revisions down for a lot of the months, not all, but a lot of the months, big revisions down. And it adds to a little bit of uncertainty on how realistic are these numbers. And not only that, the question always goes back to what kind of friggin' jobs are they? If we're just creating burger flipper jobs or car wash jobs, it's not quite the same as good manufacturing or finance or accountants or plumbers even or carpenters or whatever. So we need to do a little bit. I'm going to start before this next jobs report. I'm going to start digging a little bit deeper into what kind of jobs are these. Because what I've been hearing is services and healthcare. That tells me these are not high-paying jobs. Because healthcare typically are not the doctors or the nurses, the high-paid people. Typically are the orderlies and the people who do the grunt work, the drivers for the labs and that kind of stuff. And services just means busboys and porters. It doesn't typically mean, attorneys or whatever. So we're going to dig a little bit deeper into these jobs and see what in the hell is really going on, because it's obvious now. The Fed is looking at two things. They're looking at prices. They're looking at jobs. So we've really been focused on this show toward the prices. We've been taking them for what they're worth, the government's numbers on jobs. Now it's time to dig a little bit deeper because it's coming to crunch time, and we need to really know what we're talking about as far as those jobs numbers goes. Fed Governor Chris Waller out today talking about let's slow down the pace of rate cuts. So what we have on the Fed, the Board of Governors of the Federal Reserve is some real disagreement on the path of rate cuts. And you got rate dubs who want rate cuts right now. And those are the people who are going to be leading the charge when the Fed meets at the beginning of November. You also have the interest rate hawks like Waller here, who are, let's slow this down. Let's slow it down. And I think that on this particular occasion, I would agree with Waller. I don't really see why we need another rate cut right now. As for the economy, it would be good for me in real estate. Selfishly, I hope they cut rates back down to zero. Just for the economy and the overall condition of the United States economy, keeping rates high is actually a good tonic. It can kind of maybe change some mindsets in this country about spending money, borrowing money, and saving money. And we haven't had a normal interest rate environment for many, many years, since before the big collapse in 2008. Pretty much been funky ever since. So let's see now this next FOMAC meeting coming up in I think November 7, 6 and 7 or 7 and 8, right around there. Going to be interesting to see when we get the minutes of that meeting how the voting went, depending on what they decide they're going to do. And lastly, guys, end of this month. Actually, I think they're going to release it on Halloween. The PCE number, that's the big data now. We got it coming for the rest of this month. It's a big deal, man, because we know where we're going to have these jobs numbers. This is the other side of the coin. Which way is the Fed going to go in November is going to come down to jobs, prices. I think they're kind of sloughing off this high core CPI number. Even the core PPI number was not a good one. So we'll see now where this all ends up. And I'm going to be watching these core numbers, though, because I think that's very odd that they're so much higher than the headline number. And typically that means there's some underlying something or other happening in the economy that's not good. Now, can we figure that out? I'm not sure, Sherlock Holmes. I don't know if I'm that type of investigator, but we're going to keep an eye on it because this signaling something and it means something. Anyway, guys, that's it for the day. I'm going to go home. I'm going to get myself a cold one. I'm going to watch my beloved Buffalo Bills tonight. We're playing the hated Jets. The only team we hate more than the Jets is the friggin' Dolphins or Patriots. And a great day, guys. I appreciate all of you guys being here. I appreciate everybody on the chat, everybody calling for the thumbs up. Yes, guys, much appreciated. I'll be back tomorrow. We'll have a normal day on the markets. The bond market will be open. I'll be feeling a little less like a holiday because it is Columbus Day today. I'm Italian after all, guys, right? Although now they're saying Columbus was Jewish. Whatever. Anyway, guys, that's it for the day. Hit the thumbs up on your way out. I'll be back tomorrow to bring you the news you need. Till then, everybody, take care. Thanks.